If you have been looking for a strategy to increase your profits, then you would typically be looking for better indicators because that's what most people will tell you. And that has some truth to it because in previous videos we saw how some indicators such as the KDJ or the stochastic RSI are very powerful. However, it seems like very few investors ever mention the importance of using the right types of candlesticks. If you go on YouTube or follow your favorite trader or analyst, you will notice that they are using the traditional candlesticks. However, today we will focus on the Japanese candles called Heiken Ashi, and we will follow the data to see if using them is really much better. When it comes to the Heiken Ashi candles, also known as the average bar candles in English, the green candlesticks typically represent a beginning of a rally and of course an uptrend, while the red candlesticks indicate a downtrend or a bearish momentum. To analyze the accuracy of the candlesticks, I decided to run some tests on the weekly and also on the daily timeframes. What we did is we told the computer that we have about 5,000 US dollars in Q4 of 2019, which we will invest over the course of the next 3 years. We will buy every time we get a green weekly candle, and we will sell every time that candle turns red. And we will simply repeat that process over and over. We won't increase our capital, we will just use that initial 5,000 US dollars, and we will of course add the gains and deduct the losses we will make with every single trade. And so to simplify everything, I made this dashboard which contains the buy and sell dates, the ROI and also the PNL, and the results are very impressive because if you have followed the Heiken Ashi candle since 2019, you would have turned that 5 grand into 93,000 US dollars, which means a total profit of 88k, and this is immense. 88,000 US dollars in profit over the course of 3 years means a 1,765% return on your initial investment, or roughly $29,000 on return on average every single year. What makes this more exciting is that if you had your way through the bull rally and let's say you didn't sell and if you hodled, which is the strategy that everyone praises for whatever reason, then you would be up 141% today, which isn't bad. 141% in return over the course of 3 years is definitely much better than what the S&P 500 or the Nasdaq would have yielded in that same time span, but it's nothing compared to a 19x. And this is why I personally dislike the idea of hodling. Also, if you somehow manage to sell the top at 69,000 US dollars at the end of last year, let's say, and if you didn't trade since then, you wouldn't outperform the Heiken Ashi candles too. You wouldn't even make half of the money these candles would have yielded, because if you bought back in 2019 and if you somehow managed to exit last year at the peak, you would have only made 39k. The most impressive part about all of this is that even in 2022, which has been pretty garbage if we are being honest with each other, as we are witnessing a very brutal bear market, the Heiken Ashi candles would have given you a positive return. These candlesticks are definitely far from being perfect, okay? And we're not here to claim that because there are some times where you would buy and the market dips, and over the course of the past 3 years, there would have been 3 times where you would have lost money with this strategy. Also, sometimes it happens, you sell your Bitcoin at a certain price and the indicator flashes a buy signal again at a much higher price, which is always frustrating. However, we know that no model, indicator or candlesticks are perfect, and the data is pretty much showing that sticking to these types of candles is very lucrative. This isn't my opinion or yours. This is what the numbers are telling us, and this is why I like these candlesticks. Now, to be more certain about the choice of the candlesticks, I decided to run similar tests on the daily time frame, not from 2019 of course, because that would be a lot, but if you go on the daily time frame now, and if you look at the 3 months ROI dashboard, so pretty much how much money you would have made with the Heiken Ashi candle since the end of June with 5,000 US dollars, we could see something very similar to the weekly time frame. Now, beforehand, I want you to bear in mind that we are talking about Q3, which hasn't been the worst of course, but it hasn't been good either. July, August and September, didn't have much momentum and much to offer, and we've just been experiencing a sideways movement with some traps here and there. However, following our candlesticks on the daily time frame would have given you a 45% return, which is very impressive. I mean, regardless of how the market has been behaving, a 45% return in 3 months is decent. Not to mention that if you held the past 3 months, you would be down 10%. And even if you saw the 3-month stop at slightly over 25k, you would still have made less money than with the Heiken Ashi candles. So overall, I think that the Heiken Ashi candles could be used as an indicator, and they are in fact good, and they are even outperforming several indicators. This doesn't mean that you should give up on any other type of candle, but the average bar candles have shown to be very accurate. So this is the video, this is my opinion. Thanks for sticking by till the end. Have a nice day, and I'll see you in the next one. Don't forget to subscribe, and bye bye.